Hello, guys. Today we discuss how Harris Irfan delves into what Islamic banking and conventional banking is, and the revelation will shock you. Whilst you're at it, don't forget to subscribe. Thank you. Let's listen. In the first video, he speaks about how Islamic banking has evolved into something fraudulent through fractional reserve institutions. Now, let's listen to him.
Probably the first instance of the modern Islamic finance era is an experiment called the Mitghamar experiment. Mitghamar is a town about 80 miles from Cairo, and an economist created effectively a social bank, or a social savings and investment institution, and depositors would put their money with the bank. That money would be used to fund local industry directly, and the profits would be shared with depositors.
Right.
So this is a very pure form of mudaraba, which is a
no riba.
No riba involved, no interest involved. This is a split of profits, and that's a real risk-sharing, real economy transaction, which is very Islamic. And that morphed eventually into a sort of social bank, social savings institution. I think there were 8 other similar institutions in Egypt at the time. And from there, this was sort of proof of concept. And from there, in 1975, the first major Islamic bank was formed in Dubai, called Dubai Islamic Bank. At the same time, the Islamic Development Bank, which is a multilateral institution, was formed. And now you see the development of commercial Islamic banking. And at that point, you need to be regulated as a bank by the relevant authorities. And if you are to be regulated as a bank, then you must be a fractional reserve institution.
Right.
What does that mean? Well, it means that for every pound or dollar you deposit in the bank, they have the right to lend out more than is deposited in the bank. And that's the fractional reserve. So, for example, they may lend out $10 for every $1 that's deposited. In other words, they've created 9 new dollars from nothing.
Really?
It's a form of alchemy. It's money from nothing.
Right.
So if you were to ask a sensible person who knew nothing about, who was not formally trained in economics, what do you think of this? They might reasonably conclude it's a form of fraud. And yet this is perfectly lawful.
Do all banks do this?
All banks do this.
British banks, American banks?
Every bank in the world that is regulated by a central bank is a fractional reserve institution.
Right, let me explore this fractional reserve.
He then delves into fractional reserve banking, which is a system in which only a fraction of bank deposits are required to be available for withdrawal. Let's listen.
Only the money, the deposits that pay for my mortgage, there's other money involved in that, and this money is what, just comes out of nowhere?
It is. I mean, you could literally say that it is created at the stroke of a keyboard click.
But why? Why does this exist?
So let's go back to gold in the 16th century. If you had some gold and you wanted to store it safely, you would go to your local goldsmith and you'd say, "Can you put this in your vault? And give me a piece of paper, a receipt that shows that I have put some gold with you." And he gives you put, let's say you weigh 5 pounds worth of gold and you put it in the vault. He gives you a piece of paper that says, "I owe you 5 pounds of gold."
Right.
All well and good. Now you know that this is evidence that you own this. And it so happens that the goldsmith has a good standing in the community. Everybody respects him. They know he's an upstanding guy. He's a safe guy, and he's good for his word. So you can actually circulate this piece of paper in the economy as money, because it evidences that you actually own 5 pounds of gold, or you can have it divisible. He can give you 5 pieces that say, "I owe you 1 pound."
Right.
Now, again, this is all very good, but at some point the goldsmith says, "Wait a minute, this guy who's deposited money with me never comes back to redeem his gold. So I could actually issue more pieces of paper than I actually have deposits." Now he's created a fractional reserve. So the practice became that he would issue more receipts into the economy, and it was made legal. And eventually we saw institutions like Bank of England, which effectively codified this and institutionalized this process. So it was possible for a bank to maintain a reserve, but to issue more money than was actually stored in its vaults. And this is the origins of the fractional reserve system. Now, as long as the government found some way to regulate.
But how does Harris Irfan relate this fractional reserve banking to Muslims and Islamic banking and even mortgage? Listen.
So this fractional reserve banking underpins all Islamic banking?
All banks, including Islamic.
Right. So what does that then mean for the Islamic quality of these products? Like what's your argument about the Islamic quality of, say, an Amana Finance mortgage?
Yeah. There was a time that I felt, and this is going back 20 years when I started the Islamic finance team at Deutsche Bank, that I felt that if you're a practicing Muslim and you're ideologically aligned with your faith and you wanted to invest in a way that didn't compromise your principles, and you wanted to offer financial products to other Muslims and to people who wanted to invest and participate in the economy in a halal way, in an ethical way, whether or not they were Muslim. I used to think it was possible to do that. And we actually had a bunch of bankers who were working at places like Deutsche Bank who were young, practicing Muslims, technically capable, ideologically aligned, and they were creating some very interesting product. But we never really stepped back to think, actually, what is the fundamental basis on which we are manufacturing these products? Because it's all very well that we've mastered the elements of fiqh al-mu'amalat, the jurisprudence of transactions, of commercial and financial transactions, so that we can create these complex contractual structures that we call mudaraba, musharaka, murabaha, and so on. And we have these contracts that we vetted by theologians for compliance with Sharia. And we say, yeah, this contract I'm using to finance the building of a house or financing the purchase of a home through a mortgage is Sharia compliant because the contracts are an ijara with a diminishing musharaka or some other combination. But we don't step back and think, hang on, what's the basis on which this bank is able to give money for the financing of this house? The basis is money creation through the fractional reserve system. So again, every time you deposit $1 in the bank and they can lend $10, they've created 9 new. We have these contracts that we vetted by theologians for compliance with Sharia. And we say, yeah, this contract I'm using to finance the building of a house or financing the purchase of a home through a mortgage is Sharia compliant because the contracts are an ijara with a diminishing musharaka or some other combination. But we don't step back and think, hang on, what's the basis on which this bank is able to give money for the financing of this house? The basis is money creation through the fractional reserve system. So again, every time you deposit $1 in the bank and they can lend $10, they've created 9 new dollars of new money, which is the definition of riba. Because you've created money from nothing or money out of money. That's an excess, that's a surplus. That's how riba is defined. So the entire banking system is by definition based on riba. Wow. And if you have Sharia compliant contractual structures on top of that foundation, you still have a non-compliant system.
He finally calls out that there is nothing, absolutely nothing like Islamic banking. How?
And we can make it halal. Actually, Islamic banking is an oxymoron because you cannot be Islamic and be a bank, because a bank is a fractional reserve institution that creates money from nothing, which is riba.
I mean, that's outstanding. I mean, so a person who today wants to purchase a house, a Muslim living in Britain who wants to purchase a house, are you saying that they should regard all Islamic banks, Islamic finance instruments, in the same way as a traditional high street bank, as a riba-based bank? And so these banks and these instruments are haram?
Well, here again, I demonstrate some cognitive dissonance, and it's very difficult for me to say that that is the case.
Yeah.
First of all, is there a viable alternative? Today, I don't believe that there is. Secondly, are there many Muslims working in the Islamic finance industry who are trying to develop a more wholesome product?
Yeah.
Not just halal, but tayyib. Not just permissible, but wholesome.
Right.
And the answer is yes, there are many Muslims that in that industry. And I also believe in supporting them to achieve those objectives.
So these Muslims are creating the equivalent financial products without the fractional reserve under the hood.
They're within the banks.
Yeah.
They still have fractional reserve under the hood.
Okay.
But there are many Muslims now who are creating new startup Islamic fintech firms,
right,
who are trying to create financial investment products and financial financing products, which are not just contractually to the letter of the law, but also within the spirit of the law, i.e. not based on a fractional reserve system.
Right.
But that's a very, very, very tiny minority.
He moves on to say that the silent normalization of riba has crept through Christianity and it is now creeping into Islam.
Gets deposited, a pound is invested somewhere else.
Right.
And it's not lent somewhere else at interest, it is actually invested somewhere else.
Okay.
Now, actually, that's a key point because unfortunately, I see very, very few Islamic fintech firms who act as financing firms who do finance businesses on a risk-sharing basis. Right. Many of them use a form of contractual structure called commodity murabaha. And it doesn't really matter what that means, but let me give you an analogy. In the Middle Ages, of course, the church banned usury. Usury was forbidden in Christianity, always has been. And the way that financiers would circumvent that in the Middle Ages was to say, well, what if I took this contract and this contract and this contract, 3 different contracts, each with different aims. So it was called contractum triennius. And each of them was not alone with interest, but when I put them together, they effectively allow me to lend and get interest in return. Now, the church at the time said, well, these contracts are not in and of themselves non-compliant with church law. So no problem, you carry on, which is exactly what's happening. And hence we now see the development of the modern financial services industry. And even the church itself has turned a blind eye to interest. By, I think, 1917, the Vatican themselves were investing in interest-bearing bonds on their balance sheet. So that creeping normalization of usury has meant that original church law has been completely disregarded. And I fear that's what the Islamic finance industry has been doing for the last 60 years since the Mitt-Rammer experiment in Egypt.
Yeah.
He concludes on whether Bitcoin is halal or not. And anyway, what is your educated opinion on this discussion? Please don't forget to subscribe to Amira's Web. Thank you for listening.
Which means you are not a Muslim if you don't firmly believe that this is a pillar of my faith. To share what you have with those who don't have it. It's called zakat. It's the only religion that makes it a pillar. Yes, the other religions do have charity.
Finance. So I firmly believe that money should be separated from the state. And that's why I believe in a decentralized form of money, as gold was once when we had a gold standard. But it is really no longer, it's too impractical, which is why, again, I come back to the idea of a sound, hard money like Bitcoin.
And I think we need to explore Bitcoin